This is a standard. We talk about this a lot, but just to be very clear, if you're on a chart in Thinkorswim, you go to Studies, and you go to Add a Study, and you go to Trend Studies, and you go to P, and you go to Pivot Points. That's how you add them to your charts. They're super useful because they're trend studies. It's just like the 50-day moving average, 200-day moving average. It's that kind of thing. It's a mathematical thing. So it's not sentiment or anything like that. But the nice thing is that they tend to be obeyed. Look at this. See, you go like that. This is what? This is gold. Gold goes like this. It goes up to the top of the trend, stays there, comes out the next day right in the middle because it didn't move, right? Then it goes to the top of the next trend, finishes above it, which is very bullish. And then it goes flying over the trend and comes back into a normal thing. But these are not much different than if you think about the bounce lines. Like when we talk about bounce lines, you got the a weak retrace and a strong retrace and a strong bounce and a weak bounce. It's just like that. It's, you know, you think of it in those terms that you know, where are you finishing for the day? You in strong territory or weak territory? And also, of course, we have our 5% rule. But another thing this does, well, this one's a 15-minute chart, and these are shorter term 5-minute charts. If you're day trading, a 5-minute chart's fine, but for a longer term, a 15-minute chart. So you can see here at 4,600, you've got consolidation, right? So we went from 4,600 to 4,900. So that's 300 points up. And if we went 300 points up, calculator, no calculator. Calculator. So if the total move is 300 points, all right, then we would easily calculate that 20%, 0.2 of 300 points is 60. And therefore, your retraces are going to be 4,900 minus 60. That's a strong, that's a weak retrace. 4840, which is right here, and see what that is? That turns out to be the red line on the top. So in other words, that's your strong retrace. That's your weak retrace. Sorry. This then is going to be basically your strong retrace, although these lines aren't the same. But if we minus 60 again, so 4780 is really the right area. 4780. All right, so that would be a strong retrace. And then 4720, obviously, where you're getting back down here, that's going to become your strong bounce. And then below that is going to be 20 minus 60 is 60. So then 4660 is your weak bounce line. Whoop. And that's all it takes. Those are your bounce lines. And the bounce lines are generally, I'd say, a little more reliable, but these guys get obeyed. Now, why do pivot points get obeyed? They get obeyed because everybody uses them. All the technical traders use these things. So if all of them use these things to make their decisions, they're going to hold up. That's how come they work. So if you're a day trader and you're planning your entry or exit strategy, you say, oh, I'm going to buy here. You don't say, I'm going to buy here. You say, I'm going to buy here. Now, we look at these and the 5% lines, and we make better decisions that way because we know where the true support is. This is just the technical support. But still, it's good. It's a good, reliable technical support. Gives you a great idea of what's going on. It works over multiple periods. You can go into this chart, the flexible grid. Oh, wait, what was that? Oh, where did I have it? Well, anyway, you could add pivot points to a longer term chart here and make it bigger or do whatever you want. It's super useful. It's the bottom line. Great, that's what it was. Forex trader, futures trader. I don't have any of these set up on this machine, so Anyway, you can change the time frames here too, though. You can if you want to. Like this one is at 15. It could be at 30 minutes or an hour. Here's an hour. Except see, it's too yucky when it's like that. So. But there's lots of ways to look at things for consolidations and such. So what do we say about gold? Oh, you just did gold, so that's fine. So that's how you get an idea of whether something is bouncing, a weak bounce or whatever. And of course, if it's longer term, I prefer to use FinViz because it's just easier. FinViz has nice charting. And all you got to do is go futures and S&P. And this is obviously too long because this is days. So hourly. So where's our consolidation on the S&P? Now, there's two schools of thought for the 5% rule. You can either go spike to spike. You can't mix them up though. You either go spike to spike, so high to low, or, so for short term, there's nothing wrong with that. But for longer term, you really want to find base to base. So in this case, it's kind of hard. Can I? No. Can't. What if I start with an hour and stretch an hour? No, that doesn't work either. Well, I guess on an hourly basis, I could find a base. So that's what I can do. I can confirm. So 68.20, right? And now we're going to roll it along. And you have to be careful because look, 68.20 is no longer where it was. 68.20 is over here. So would I call 68.20 a good base for support? I would, because really we only went below it here for a day. And these guys pretty solidly held 68.20, and now we're all the way back to December without it being violated. What was this at the time? And that's 68.80. So 68.20 is a good base for the S&P in the futures, by the way, not in the standard 500. So I would count 68.20, and then the question is, what's on the high end? On the high end is 70.20. So spike to spike, it's 200 points. We definitely think 68.20 is right. Now the question is 7,000 right, or should it be 70.20? And now we're over here, and it's more like 7,000, and that's the only time we hit 7,000. So I would call 7,000. I would call over 7,000 an overshoot, and then this then is 68.20 to 7,000, which is 180, and then times 0.2 is 36. So now you got to test it. Now you say, okay, so 7,000 minus 36 is 664. Wait, what'd I do? 7123 minus 36, 6964. So here's 6964. So the question is, was 6964 either support or resistance going up and down? And I can't make a great case for that. Okay. And then minus, what was the frickin' number? 66? I am so confused right now. 36? Must have been minus 36. 69.28 is right here. Look at that. That's where we gap down to there. And that's a strong retrace. Okay. So minus. Oh, wait, I can do this. 36. Yes, I was using 36s. So minus 36 again is 68.92. 68.92 right here. Look at that. See how well that lines up? So 68.92 wait, 92, very tricky. All right, so 68.92 would be the strong bounce line, and then minus, damn it, is it 32 or 36? Minus 36, minus 36 again is 68.56. Oh, look at that. Look at this right here. See how interesting that is? So 68.56, which is right there. That's the weak bounce line. See what's happening there? You hit the weak bounce line, went back to the strong bounce line, a little bit below the weak bounce line, back to the weak bounce line, back to 68.20. Well, actually, that was low. And then a strong bounce, and now back to the weak bounce line again. So what that tells you, and it's not, it's a quick calculation, then you check your levels and say, okay, I think I'm onto something here. Those seem to be real lines of support and resistance that are holding up. Okay, then you can go back and check it here and see what these things say. And these things say you got 68.96 and 68 even, not 60. They're not looking at 68.20. But you see how the 5% rule is more accurate? The 5% rule is telling you 68.20 is going to hold, and it does. Their line is 20 points below it. The idea is just to give you a sort of a range where you think something's going to turn and where you think something's going to hit resistance. And it's especially useful for timing your options entries. In other words, so when you're filling a stock, in fact, that's what this whole thing is designed for on Thinkorswim. If I'm, let's say, Barrick Gold, right? Okay, so here's Barrick Gold. And if I want to buy Barrick Gold, then I want to look over here. I want to look down around 49.50. It's almost at 49.50. So I want to buy at 49.50-ish, or even a little bit lower at 49.40, 49.30. That's where I want to get in. I want to buy puts. I'm sorry, I want to buy calls. I want to buy my long calls, and I want to sell puts down here. This is the bottom of the channel, of the short-term channel that I'm working in. I want to sell calls in this part of the channel. The short calls I want to sell in my spreads, I want to sell up here at 51. The short puts and the long calls I want to pick up down here in the channel. And this channel has been pretty good for the last week, right? And now I can check that, and I'm sorry, we're looking at 49.30 to 51.25. All right. So now I go back again to my friends at FizBid, FinBiz, and we look at the 15-minute chart, let's say, because I got a good long period here. And yeah, look at that. That's a pretty reliable channel, right? We had a dip below on this day, but it recovered. And 49.25 to that 50.25, right? That's my basic range that I want to look at. I can get into the 5-minute chart here. It's too short. No, okay, 15. So that's going to give me an idea. If I'm trying to fill a spread, that's what my range is going to be. Now, also, let's say I was trying to do the $50 calls, right? So my range is $1 up and down from 50, 40, 49.25 to 50.25. All right. So now on Thinkorswim, I go boom, and I say B. What the hell? Huh. And so let's say I'm trying to sell the March $50 calls. March $50 calls are $3.85 to $4, and they have a 20-cent. No, I'm sorry, that's not the delta. Damn it. Let's get rid of the last. Not you. What? Oh, here you go. Delta. So the March $50 calls have a delta of 53. That means they're going to move 50 cents for each dollar. So what does that tell me? That tells me that the best I'm going to do is going to be 50 cents better than what it says there. But we're at 49.60. We're right in between. So I'm only going to get half of this number, which is 25 cents. And so my best number is going to be 25 cents below 385. So 360 is the best I can expect to do if I'm trying to buy this call. If I'm selling it, I hopefully can get 25% over 4. So let's say 425. So now I know where I want to sell it. I want to sell it at 425. So I can then go into this thing. Well, let's do copy the symbol. You know, I'm not trying to teach a whole thing on how to trade here. I'm just trying to give you guys an idea how to use these things. So now instead of Barrick, I'm going to have the symbol. That's the option I want to buy. And all I have to do is say, oh, okay, I want to sell. See, I want to sell 10 contracts at 425. And I want to buy, not the same contract, of course, but let's say I'm selling these short-term 50 calls. But if I was buying something, or if I was buying the same contract, I would say I want to buy at 375. And again, I wouldn't be buying and selling the same contract like that. But conceptually, that's how you have to set up your stocks. And I just put it in, and I see if it fills. And if you're trying to fill, you know, if you're trying to sell 10, don't do all 10 at once. Set up 5 on the put side and 5 on the call side for your best, you know, the number you would like to get on each side, and whichever one fills, then take a look at how the trade's doing. Because obviously, if it filled, it went to the top or the bottom of your channel, right? That's where you planned on it. So you use that to your advantage. Use these intraday moves to your advantage. Use these lines to your advantage, doing that sort of thing. See if we have any questions, since that was pretty informational. No. All right, great. Then I will move on. All right. Sorry, I got the drillers again. I don't think it comes out on the microphone, which is good, but you might think it's all in my head. So where were we? No, this is no good. All right, forget you. So how are we holding up? Half a point. That's sad. So in other words, if we fell 2% yesterday, then what does 0.2 times 2% is 0.4%, right? So you can apply the same logic of the 5% rule. 0.4% would be a weak bounce. 0.8% would be a strong bounce. Nobody is strong bouncing, and frankly, everybody is failing at the weak bounce line. That's sad. And don't forget, nobody gives a shit what the Dow does. The VIX has not gone back over 20. That's good. That would indicate things are calming down, but they're not. I mean, nobody's in very good shape right here. You know, we can look at it on the hourly chart. But these again, this is the weak bounce line. Everybody failed the strong bounce. Well, the Russell actually blew up and came back down. But even so, still, in the end, it is now failing at the weak bounce line. So when that happens, you have to imagine a failure at the weak bounce line on the first day of a drop indicates that you are very likely consolidating for a move to a lower zone. So we're not going to be done at 2.5%. We're not even going to be, we're probably going, if you can't hold this, if you can't hold the 2.5% line, we fell 2% yesterday. The weak bounce takes you back 0.4%. Strong bounce takes you back 0.8%. You can almost laugh off the drop when you get past the strong bounce line, but failing the strong bounce line and failing the weak bounce line indicates you are more likely consolidating for a move below the 2.5% line. And if you're going below the 2.5% line, the next stop is 5%. So that's what this looks like right now. You know, Trump said, we will not use military force in Greenland. And the only problem with that is Trump hasn't said anything that's been true. I would have felt better if he said we will use military force in Greenland, because you would be like, oh, bullshit, we're not doing that. When he says we're not going to do something, considering that let's say half. I'm going to say half, and that's silly because you know it's more than half. But let's say half the things he says are lies. It's like I said, I would feel better if he said we were invading Greenland, because then I would be like, oh, we're not invading Greenland. He's just posturing. He's saying we're not invading Greenland. That's kind of scary. That sounds like planes are on the way. You know, we talked about it in chat. I'm like, I'm sorry. This is how World War II started. Very, very much so. This is how World War II started. Oh, he only took Poland. He only took Austria, was kind of his anyway. So you don't worry about that. You know, let's not do anything because Austria was kind of his. Oh, Poland. Well, that was right next to Austria. You know, it's kind of like, you know, it's kind of like if you have a backyard and you take over the other yard, and then there's this other yard, and if you didn't take that one over, then you'd have a funny shape. So it makes sense that you take over the other one too. I mean, it's not how things should work. I mean, holy cow, Trump during the speech today threatened Canada. I mean, Canada. And this is what happened in World War II. Everybody's like, isn't anyone going to stop him? Like, I'm not going to stop him. You going to stop him? No, I'm not going to stop him. How bad could he be? You know, at a certain point, you know, people have to defend themselves. And I know I don't think we're really going to have. Well, that's the calculation that's been made, right? I don't think anybody's going to go to war over Greenland, most likely. But we're losing. We will lose our allies in Europe. We will have no allies. It ain't going to be Canada. I mean, you got to decide. Whatever it was Trump said today, it was like, I would, if I was Carney, I would tell him to just drop dead. I forgot what it was, but I heard it in the speech. I'm like, are you kidding me? Like in the World Economic Forum and saying this shit. So he obviously doesn't like Mexico. Who's our ally? I don't know. Anyway, so I mean, but you know, you got to pay attention. It's a global situation, right? So you got to think about how all this is being affected. Now he's talking about, you know, oh, he's not going to go to war, but he is going to attempt to make it so painful for Europe that they have to give him Greenland. And he's talking about, he didn't say he's not going to go to trade war. He said he's not going to militarily take over Greenland. So I don't know. We'll see what happens. But that's, you know, that's the tricky situation that we find ourselves in. So getting back to chat, you guys are going to love this when we get back to chat. Market news. What is that? Oh, the weekly wrap up. I'm like, where is this article? And that was Wednesday, and this is yesterday. So we're talking about today. I love my little infographics now. Robo John Oliver reporting from Davos. Oh yeah, this is the new UN. You join the what do they call themselves? The Board of Peace. You see how that's like an inside joke? It's like we are Board of Peace. That's this group. And so this is the new UN. You had to pay $1 billion to join the Board of Peace. And that's literally what Trump was saying at Davos. He's like, hey, you UN people didn't pay your dues, so now I'm making a new Board of Peace. And if you want to join, it's $1 billion. That way we make sure everybody pays. Pays $1 billion for what? Apparently, there's a bunch of countries that don't care. They're paying him. It isn't the big countries that are allies. Oh, it's Hungary. Here you go. It's Israel, Hungary, and Vietnam. Not France, not Norway, not Sweden, probably not Spain, probably not Germany. It's basically just whoever wants to pay him $1 billion will decide, will be the new UN, and everybody else is just gonna hear his announcements. Well, I mean, I guess if you have $1 billion and you're one of these countries, it's like, why not, right? I don't think giving Trump, well, obviously, I don't think giving Trump $1 billion is going to guarantee anything. So let's see. So here's our roundtable report for the day, for the morning. Oh, this is a big deal, right? So talked about this. I don't remember if it was in the webinar or not, but we talked about this for last week. We've been talking about it for a month. This is very bad. The interest on 10-year notes, which is the most important one of all notes, the interest on the 10-year notes went up to 4.3%. Very quickly broke through, and it's now up here. If it keeps going, we got some big problems, because we talked about this already. We have a 40,000 million billion trillion-dollar debt, and 0.01, oh no, times 0.01, 1%, is $40 billion. Is that right? 40 trillion, 4 trillion, 400 trillion. No, something wrong. How did that not work? 40, 1, 2, 3, thousands, million, billion, trillion. Did I do that wrong before? Times 0.01, $400 billion. See, I knew it was a bigger number than that. Okay, so 40,000 million billion trillion. 40 trillion. That is our national debt. Just insane, isn't it? So this little spike here, this is in 3 days. This is 3 days. So from 414 to 430 is 0.16. So times 0.0016, $64 billion. Remember that show, the $64 billion question? So it's $64 billion. That's how much the last 3 days have cost us. $64 billion is what that little tick up in rates represents. A full percent is 400, sorry, a full percent is 400 billion. This is just 0.01, 0.16 of 1%. That's all this is. That comes right out of the budget. It comes out of the budget, and it puts us more in debt because we're not making it up with any revenue. So it puts us more in debt. And if the Supreme Court strikes down Trump's tariffs, that's another $100+ billion less collection, plus $100 billion he's going to have to pay back to the people he took the tariff money from illegally. Not saying it's illegal now, just saying that if the Supreme Court decides it was illegal, then he took it illegally. That's what the law is about. Did you do that illegally or did you do it legally? That's what they're deciding. While Trump and Bessent claim that they are going to be able to make up the collection by calling tariffs fees or some other bullshit to get around it, it's going to go back to the Supreme Court again, and they'll have to decide it again. But this is all, money that could and should be going to other programs and doing other things and so on and so forth. That's why Trump is so crazy about the Fed and getting them to lower rates, because it's his budget. He wants to raise the Defense Department by $500 billion. And he says that money is going to be paid for by tariffs. But he already said rebates to all the American people would be paid for by tariffs. And he said his current military advances are going to be paid by tariffs because we're already at $1 trillion military budget. And he says that his tax cuts will be paid for by the tariffs. These tariffs are freaking amazing. But the reality is we're not collecting that many tariffs. And now he's starting a trade war with Europe. Why is he starting a trade war with Europe? Because he gets to now say, oh, we're going to be charging Europe 25% more on imports. But those numbers are bullshit because you're assuming that Europe isn't going to go elsewhere, just like China. China, remember that soybean issue? China never bought another soybean from us. Trump paid the farmers to shut them up. But the reality is China didn't take the soybeans. They're all rotting in warehouses. Europe can do the same thing to us. They just stop buying our shit. Then you don't get your tariff revenue. If nobody buys your stuff, then you don't collect your tariffs on exports or imports. They also don't have to sell to us. I mean, that's why Canada just went to China to make a trade deal. They're like, oh, okay, if you don't want to buy our stuff, we're going to stop selling it to you. We're not going to sell it to you and pay a tariff. Or we're not going to lower, or obviously Canada doesn't pay the tariff. The person who's buying the goods pays the tariff. But, let's say it's Walmart. Walmart then pressures the supplier in Canada to give them a better price so that they can pay the tariff without impacting their own earnings. But somebody's getting impacted, and that's really what Trump's theory of tariffs is that you charge the tariff to the buyer, like Walmart. Walmart then puts pressure on all their suppliers to give them a better price, because that is how Trump does business. Because Trump tells you he's going to build a building really cheaply, and he turns around to all the contractors and says, hey, tough luck, we're building this building really cheaply, so you're only going to get this and you're only going to get this, and then he doesn't pay him at all. And that's how he pays his own profits back up, because he doesn't actually pay the guys he promises to pay. But that's not how the real world works. And that's why he had to stop. He had to leave New York long before he was president. And the reason he had to leave New York was because nobody in New York would do business with him anymore. He couldn't get anything built. He was licensing his name out, but he couldn't actually get buildings built because no contractors would work with him. No suppliers, no contractors. He had a terrible reputation for not paying people or declaring bankruptcy in the middle of his payment programs. And so you build a casino and then you declare bankruptcy a year later. You haven't paid millions and millions and millions of dollars in bills, and those people all get screwed. And then you say, hey, I'm building a new casino. And you're like, no, thank you. They're not going to jump in and get on board with these things. So where were we? Oh, yeah. So that was the Treasury. So this matters a lot. This is a big problem. This is not a happy breakout. This is a breakout that's going to cost more for mortgages. It's going to cost more for our borrowings in the Treasury. It's going to cost more for, well, who knows with credit card rates, because Trump's also claiming he's capped as of today. Interest on your credit card should be 10%. There's no law that's been passed. There's no official anything of it, but he said so. So is it a law? Is it not a law? Is it going to affect the credit card companies? Nobody knows. So after we have the roundtable breakdown, I still have Zephyr and Warren do their morning report, except now their morning report is like saying, okay, well, from the roundtable report, these are the things that we feel are still worth mentioning. So even though they're part of the roundtable, the roundtable is arbitrated by Gemini. So Gemini ultimately decides. He gets reports from everybody, and he decides which ones he wants to use and make sure that nobody's repeating themselves and so on and so forth. So that's great, and nothing's really falling through the cracks, but I like the nuance. I like the fact that Zephyr comes in and says he thinks that the Japan bond meltdown, this is Japan bonds, he thinks the Japanese bond collapse is a serious issue that did not get mentioned. He's talking about Davos, even though it's been talked about, he still thinks it's important. The down payment of housing thing, Bodhi decided was important to talk about. The Supreme Court got mentioned. I think that's Jabal, actually. Huh. I'm confused. I guess it's all Zephyr's. Okay. So Zephyr mentioned all these things and just put his own symbols on it. And then we have a trade of the day of UAL. And then Warren, he says, here's what I'd add for PSW members. And Warren says, watch those rates, right? Which he was right. When it did, if the 10-year goes over 430, you can get mechanical pressure on duration assets, mega cap tech, long multiple software, regardless of what Trump says. And lo and behold, well, if I can figure out where I put them. Lo and behold, that's what happened. We got pressure. Supreme Court is arguments, not necessarily a decision. That's an important nuance. Housing policy may be bullish for builders, but it's a second order trade. Yeah, it's not going to help. It's going to raise, what it's going to do is it's going to push up housing prices without causing any additional housing to be built for a while. He's wrong about inventories. They pushed off till tomorrow because of the holiday. Johnson & Johnson, Halliburton, blah, blah, blah. Gold. Now he's saying gold isn't just risk off anymore. In other words, that's it. People have this bullshit going on with Europe until this is resolved. It's going to start impacting the dollar. It's going to weaken our currency, but not just our currency. Japan's currency is falling apart too. Europe will, people are just losing faith in fiat currency. And if that happens, the only way to go is gold, really. All right, there's Hunter's report on what's going on with Trump. This is Barry Ritholtz. He's a good analyst. I respect him actually. He pointed out that only interesting, right? Because we didn't even notice this. Only 2 Magnificent 7 stocks, NVIDIA and Google, only 2 of them beat the S&P. The S&P is about 19-20%. Oh, that's the S&P right there, 18%. Microsoft did not perform as well as the Magnificent as well as the S&P. Meta, Tesla, big down. Apple, terrible. Amazon, even worse. So the Magnificent Seven was not such a great trade last year. It was really all about Google gaining 65%. And of course, that brought up the S&P. And this is an important point too. In the tech bubble, in March of 2000, we were trading at 43 times earnings. It must be the NASDAQ, right? Huh. He doesn't really say, which is kind of sloppy. It should say which index. But let's say it's the NASDAQ. It doesn't matter though. 43 times earnings and 1 times and earnings is not the same thing at all. So we are not into this kind of territory yet, and that's what's important. Net income of the top 6 banks. Now, you know, it's always important because you see these numbers like top 6 banks 157 compared to what? You know, it was more than that in 2021. You know why? Because the government gave out all that money during COVID, and it goosed the bank earnings. Now Trump is back, and money is being shoveled back to the banks once again. This is insane that banks. This is fees. There's no, you know, the banks make money charging fees for the most part. That's not helping anyone. That's money that's being extracted from real people. I mean, it shouldn't really be legal. That's the incredible thing here. It's like, how is it legal that they take this much money out of the system? That money flows through the system, goes there. And look at JP Morgan though. They're the monster. Holy crap. Bank of America. Goldman is only this little yellow thing. It's JP Morgan is taking the money. Just some new stuff. Here's how busy. Here's how Congress did this year. 61. That's pretty awful. It was only 34 in 2024 though. What do you mean by oh, I see. The Congress of, so first year, second year. So first year is blue. So this is when they sit, their first year sitting. And then apparently most Congresses, or actually all Congresses so far, have made up for it in their second term. So this year we would expect a lot of laws to be passed. And you know, you might say, oh, we don't like Congress, we don't like laws, but you know, laws, you know, we need laws. It's a lot of laws that are needed. Here's a book that we were looking at. That's good too. I like that. Lots of information on my side, isn't there? Oh, somebody said thoughts on a Hewlett Packard trade. Sorry, RN, I did not see that. I'll have to get back to that. We did a top trade on GNRC and a nice explanation by Bodie of why we were doing it. GNRC is a generator company. We've always liked them. We played them before, and they're just in the right place. Well, no, they're not in the right place. I regretted that we didn't jump on them here. A month ago, we should have jumped on them. They were down at below 140. Now they're at one something else. Let's say, I wish I could read these things. 140, 150, 160, 170. So now they're 170. That's 20% higher than 140. But in the end, what we're doing is, you see what I say here? Sell 5 2028 150 puts for $25. So that's going to be net. You get 25 in your pocket now. You promise to buy them for 150. That's net 125. I absolutely want to own them for 125. So I don't even consider that, to me, that's free money. It's like, yeah, no kidding. I would love to buy GNRC, which is currently at 170 for 125. So if I sell the 150 puts for 25, my net, if I get a sign, would be 125. I would be thrilled to own them down there. Therefore, I don't consider that a problem. So moving on, and I wrote all that here. So then I'm going to buy 10 of the 150 calls for 57.50. I'm going to sell 5 of the 200 calls for 38. And by the way, you could do this for a straight up spread. What's 57? Let's say it was 58. 58 minus 38 is 20. So it's net $20 on a $50 spread. That's a good deal. And what would that be? That would be basically you're in for 170, right? You're in for 150 plus 20 is 170. That's right where we are now. So instead of spending $170 to own a share of GNRC, you can use the option spread of the 150, 200 calls, and you have the exact same basis of $170, except for each share of each option share, you have $150 less dollars committed to the trade. And that's with no margin or anything. That's just a straight up spread. But we're doing it more fancy. So instead of just selling these for 38, and you'll be able to see why, we're selling the May 185 calls for $15. And why is that? Because this is 2028 and this is May. So I can sell 4 of these for $60 over 4 quarters. Not 4 quarters, 4, that's 5 months, whatever you want to call it. But I can sell 4 of these for $15. Might even squeeze in a 6th one. $60 is more than I paid for the calls. Now, you say, well, why don't you just do that for the whole spread? You can, but it would not give you as much money. You'd end up laying out more cash. And also, I'm not just selling for 15. I'm also selling the short puts for $9.50. Notice we're selling a few less puts than we are calls. But on the whole, what am I doing? I'm collecting $24.50, almost $25 for May. So that means that I've got a $25 cushion up. That's $210. And I've got a 25 cushion down is $125. So any number between 125 and 210, we win. It's just a question of how much. And if it goes up, we're going to be very happy. And if it goes down, we just roll. Well, trust me, I'm not going to sit there and pull it all up. But trust me, it's like you can probably roll these down to the January 2027, let's say the 120s for almost even. Right? In fact, we already said the 150 puts at 25. These are only 950. So obviously way below the 150 puts in 2028. As to the 185 calls, again, the short 200 calls are 38. So we could roll 7 of those to 3 of those, and we'd be fully covered because we have 10. We have 10 longs. If we rolled 7 of these to 3 of these, we'd only have 8 covered. So even if GNRC pops really hard, we'll still be able to roll these 185s to the 200. So our upside case is no problemo at all. Anything to the upside, and these puts expire worthless, and these puts expire worthless, and maybe we have to roll these calls, but if we have to roll them, it only means that our spread's going in the money. So why is this a top trade? It's a top trade because there's lots of ways to win. It's very hard to lose. You'd have to have either a catastrophic failure of the company, which we don't believe is happening. In fact, they already announced bad news. That's why they went down in the first place. So they already announced lower guidance for the year. They're probably not going to suddenly have more bad news. And the reasons for their lowered guidance were not good reasons. They were reasons that we don't mind. They weren't structural problems in the company. They're just sort of fluctuations in the cycle. And we've been following them for years, and we know them very well, and blah, blah, blah. So we really have confidence that this is the correct range for them, and therefore this spread will make money. How much money? Well, since we're netting in for 10,750, we have a straight up 39,250 upside. That's 365% at 200 in 2 years. And don't forget, it's at 170 now. It's already 20 in the money. So 20 times 10 is 20,000. So for net 10,000, we're 100% in the money already. Plus, we have 3 more chances to sell 15,000, so we can collect another 45,000 the same way we collected here. This is what I mean by 15,000, these two guys. We have another $45,000 to collect between now and 2028 selling short calls and short puts. Will we win every time? No, probably not. But if we do win, if we win every time, we could make up to $45,000 more dollars. And if we make the 39 here and the 45 here, that is 700, almost 800% of upside potential total. We don't have portfolios that are up 800%, okay? It's not likely that we always hit our numbers, but you don't have to always hit your numbers. If your best case is 800%, you know, it's kind of easy to make 200%. That's the point of these things. But what does it start with? It starts with solid fundamentals. We think GNRC is underpriced. We think it has that it's been beat up to the point where it's now a good bargain, even though it's still 20 times earnings, but they're growing like crazy. And they're just they just made it sort of a strategic pivot to go more commercial, and that caused fluctuations of their revenues and blah, 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 and then everybody punishes them for it. But we think it's a good strategic decision over the long term, and we're long-term investors. So that's what we like. We like this spread, and we put it out as a top trade alert. And I pointed out here, you could run this without selling the short puts, and your upside is still 100%. No, I'm sorry, your upside is your upside is 200% without selling all these short puts. We're greedy. We're taking the 800% upside potential by selling the short puts, but you have a nice 200% upside. And let me tell you something, because what's the difference between having the margin to sell the puts and not? It's having a portfolio that's well over $100,000 so you can get portfolio margin. If you just sit there and patiently do these trades and get 200% for a while, you'll have your money to do the portfolio margin account. Don't try to do things you can't do. We can make plenty of money, as you can see from the $700 a month portfolio. We make plenty of money doing things without margin. You don't have to try to play for margin all the time. Obviously, I'm giving you guys an idealized trade. This is what we like in the long-term portfolio, but I also want to make sure people understand that you can make really, really good money using very, very little margin. Just selling 2 puts, you can get to 200%, and that's very nice. That's 100% each year. And then that gets us to where we want it to be. So we have our watch list. And the nice thing about the watch list is they're self-updating. So all the charts in the watch list, if it ever loads, it's a lot of stuff. La da da. Huh, you guys ever see Anya?
Our last major watch list update was published on August 3rd, 2025, part 1 and part 2. Back then, we were just beginning to see the reality of the new tariff regime and renew.
That's my babe. All right. So these are the stocks that we killed from the old watch list. And these are the ones we kept, and then we added stuff. So here is our new watch list. So this is as of now. And what is this? This is a weekly? Weekly. Oh, these are weekly charts. All right, so Apple is getting into an area where we might want to buy it down around, it gets down to 200, it's a buy for sure. So all you have to do is look at these things and you say, well, first of all, this was a what? It was a December 1st watch list, December 3rd. So from wherever we were in December, oddly enough, these charts don't have these. Isn't that weird? They don't have these, but so AGNC went up 10%. ACAM up a couple of bucks, no big deal. Can get that one still. AMAT took off, so we can't get that one anymore. ARC-B, ooh, big takeoff, right? Wow, that was a good call. APD still available. Still available doesn't mean something didn't go wrong, but it just says. So then you start making a list and say, okay, APD is playable. ARCC is still playable. Broadcom, I know, is still playable because they went lower. Not much lower. We don't forget we were picking in December, not in November. So Broadcom, if it keeps coming down, we're going to be very excited. AstraZeneca got a little bit cheaper. Barrick, I guess this line, right? Geez. Why would they do that? Weird. Anyway, so right about there. So from 40 to 50. So they went up 20% since December. Boeing took off. So we don't want to, why should we chase them? There's so many stocks we can buy. We're only in the B's. Here's BAX. They're good. Best Buy, I know, is good. And we have to, but are they good? That's what this is for. Why were we in Best Buy? They're fighting a weak big ticket cycle. They're sharing encroachment from Walmart and so on and so forth. Flat to down comps. The dividend balance sheet is still solid. Top line growth is scarce. Guidance is cautious at 60s. The valuation is not demanding, but the structural competitive pressures haven't eased. They are update, still watching, not an accumulate. And we'd like to see, if they come back down to 60, 55, they get kind of interesting. Barclays took off. Wow, a lot of stuff we picked took off, huh? Wow, BHP took off. Holy cow, these picks good. PMY took off. BP is still playable. It's still in the B's. Berkshire got cheaper. BXMT is probably the same place, but we like them. Cheesecake Factory took off. Cal-Maine also, that's interesting. And again, it's with the imports and the beef and the protein and the Kennedy changing the thing, and now we don't know what you're supposed to eat. That all matters. So we have to check it out, but it's all things you can look at. CEG surprisingly is quite a bit lower. That's an energy play. CIM, okay, they're nice and flat. Caterpillar took off. Cleveland Cliffs, still playable. I like them. Very good for selling stuff against. CMBT is up and down, probably still playable. Comcast had that. Now, see, Comcast we bought. In December, we bought Comcast. Why did we buy Comcast? Because they were way down because of, they were trying to buy, what's his name? Paramount. No, not Paramount. Warner Brothers. They were trying to buy Warner Brothers, and it was ridiculous, and they were overpaying. Netflix is buying them. It's ridiculous they're overpaying, and Netflix is down now. But it doesn't hurt Netflix the way it hurts Comcast, because Netflix is huge with massive, massive cash flow. They can recover from overpaying. Comcast, I don't think it was a good idea at all. And Comcast did drop out of the race very quickly because it got stupid, the price, and they gave up. So we still like Comcast. Oh, they also dropped because they spun off Versant or whatever they call that other division. And it's all weird, their stock. We'll find out soon. I think this week, we'll find out what they're actually doing. CNH, holy cow, did they pop, huh? CNX, that's a railroad. I'm probably off them right now, especially with the Canadian connection. Coin is always fun to sell. Coin is a vehicle for selling puts and calls. It's not an investment. But we do love selling puts and calls against Coin because you get paid so much money. Crocs, I always love Crocs. I can't believe that they're that they stay cheap all the time. CRISPR, I like this technology a lot. They don't own it though. That's the problem. CRISPR is just the face of it, but they don't control the technology. It's not their patent or anything like that. So therefore, it's really a matter of how in favor gene editing technology is in the administration, and that makes it kind of dangerous. Cisco, we love long-term. Look, we're only in C. It's incredible how many stocks we picked. CVS, it's incredible they're all doing good too. Delta, obviously huge pop on Delta. We like them. I think we have them. DEC is still cheap. Dollar General is they jumped up a lot. Actually, they jumped up an incredible amount because we picked them down around 100. Yeah, accumulation in the 100 to 105 zone. Below 100, it's a clear value, and then they went flying up. Disney's nice and flat. Disney, now see Disney again. If it's a problem because they have the ESPN stuff, and that's subject to broadcast licenses. They're competing heavily with Netflix for sports now. Disney parks. We have the big flu going around. There's still COVID going around. There's the measles are going around. What if you have an outbreak of measles at Disney? So we're not really keen on Disney right now, given the current conditions. Duke is good. They're going nuclear. ENS went flying, so they're, you don't want to chase them. EPD we bought. That's one we picked up. They're going good. ES also jumped up, but you can still probably play it. ET also, everybody took off, huh? EVRG, we're waiting for a pullback that never came. Exelon, another energy play. These guys should do well. Ford, we have Ford, of course. FCX went flying. I mean, really flying. Fifth Third Bank. See, now, even though they're a bank, and even though they're not that big on credit cards, they're a good bank and solid, doing well. Future Fuels, I love these guys when they're cheap, and they are cheap right now, still. FMC still cheap. Geo should be doing better. Have to get to understand their contracts, but at this price, it makes sense to get into them. They make prison camps. As we were just going over, we're just about at the stage where Trump should be building prison camps for all the people he's arresting. Gilead, obviously one of you always like. GIS, not having fun. And again, now, this is why you don't jump right on things, because we wanted to wait and see what was happening. And they're messing around with the food pyramid. And you don't think it matters, but it does matter, because it depends on whether food stamps consider stuff eligible for food stamps. It depends on whether the food and the school cafeterias are providing these things. So if they start striking stuff off the list that's GIS products, then they're in big trouble. It's not just about saying, oh, well, people are going to go buy cereal anyway. That's not how it works. GNRC, turnaround with real secular tailwinds, but the price demands patience. So, as I said, I regretted that we didn't get it on at 140. We should have jumped right on that when it went down. We didn't, and I played a regret play today. Google, of course, we liked, and they've gone crazy. Honeywell, somebody just asked me about. Now, whoever just asked me about it, they took off. They're up a bunch. It's not, not as attractive. I don't want to go chasing them, so probably no. IBM, weird as it is, 300 is pretty reasonable for them. So long term, I like them. IMAX, kind of always a crazy stock, depends on the box office of the films. But I like them, but I'd like them to pull back more. Intel, of course, forget it. We have them anyway, but I mean, it's a forget about it trade now. It just went up to $52, $53. International Paper, good long-term play. Invesco, good long-term play, but they took off. Johnson & Johnson, also doing well, but again, you got to watch what's going on with their products and such. Kayla, still pretty cheap, so I think it could still be played, but they're way up from where they were. Up, KLG is gone. KHC, oh, and KHC is like splitting off the ketchup and mayonnaise division or something. I don't like it, so That puts them off my list. I don't like what they're doing. It's like Comcast. They spun off that division. The division just died. Comcast went down. That's not good. KMB nice and cheap. So you just want to double check, why did they go lower, and are they a buy now more so, or did something go wrong? KMX took off a lot since we picked them. Coca-Cola is still about the same. Levi's, we already have Levi's. We love them. Definitely playable. Lockheed Martin, wow, talk about taking off. $120 since we picked them. Oh, that's awful, huh? We have, but I say that's awful, but we have Lockheed Martin. It's a stock we have in the long-term portfolio. You know, it's not like we let them all go. Lovesac, I like them, but furniture, tariffs, imports, blah blah blah. Las Vegas Sands, they've gone down a bit, so they get more interesting down here. But why? What's going on in Vegas? What's going on in Macau? You know, it has to be checked out before you jump right on them. Micron obviously took off, and we have Micron. It was a top trade, in fact, recently. So, boom. That's why it was a top trade. Oh, and that's it for that one. See if we got any questions. No questions. Wow. I am good. I am so good. Nobody has questions. All right. La da da, la da da. See, and these are the ones that we killed from the back half of the alphabet. This is very nice. You see, it's nice to have the AI, because I would not have the patience to do this. But using the AI, I'm like, hey, make a list of all the ones that we killed, make a list of the ones that we did, that we jumped, that we love, and make a list of the ones that we think are good long-term plays. And here's our strategy that we were looking at for 2026. The main things we're looking at. Okay, and then we jump into Nike. Nike's been weird, but it's still in the kind of the bargain zone for Nike. NLY has been taken off, but we still like them. Nvidia, oddly enough, we picked Nvidia even though they're at 180. But we want to buy them on a dip. We didn't want to chase after them. OLN is still cheap. ON we picked up. We added them already, and they took off. Pan West is coming down a bit, so they might get interesting soon. Pepsi, like Pepsi, it's good solid play. Pfizer, we have a ton of Pfizer. We love them, love them. Procter & Gamble, ooh. So came down a little bit, 140. It's still around 145. That's an interesting one. I'd like to find some things that aren't $100 though. See, like PayPal. You don't want every stock to be $100. It starts eating up your buying power in the portfolio. Prudential is good, and that's probably worth another look. Qualcomm, did we not add Qualcomm? If we didn't add Qualcomm, we should. Rocket Mortgages took off. RH, I always love RH when they're cheap, and ooh, wow. They went up from 150 to 224 since we picked them. Holy cow. I didn't even see them doing that. Rio, look at what happened to Rio. Holy shit. I guess we're not buying that one. Here's Ryanair. They also everybody took off. Schlumberger, I think we added. I'm pretty sure we added Schlumberger. And I hope we added them before this happened. I'm pretty sure we did. Here's SO, still cheap. Here's SoFi. I always love SoFi. Anytime they go on sale, we buy them. Is this enough of a sale? We'll have to see what their earnings say, actually. Here's Sony. So, oh, look at Sony getting even cheaper. still watching. See, there's like keep Sony is still watching in the bucket, high quality, mid-engine, blah, blah, blah. Buy zone, accumulate in the mid-20s. There we go. SPG, still flat, so we're good on that one as a try. SYF was our trade of the year. Wait. Here. So in November and Thanksgiving, we picked SYF for our trade of the year. It took off. We actually took the money off the table here because it made so much money so fast that we were like, why risk it? Then it crashed. We went back in, we sold it here, and then we went back in over here and bought it again, and it took off and we sold it again. Well, we covered it. I think we're in our fourth round now. I think this one came down. I think it's the fourth time we've played our 2025 trade of the year, starting from the November when we first picked it. Freaking love these guys. You know, that was crazy. I can't believe how far it went down. So what happened is it blew so far over our targets. Our target was like 65, and it was already at 70. And we were like, no way does that make sense. So we sold it. It came all the way back down and went lower than our first entry. We said, wow, we're definitely buying this for 40. It went flying back up, and we sold it again. Because last time we sold it and it crashed. So this time we sold it, it didn't crash, but it went up, came back down. We said, okay, we'll buy it now at 70. I guess that's going to hold. It went all the way up to 85. And I think we got out again. We didn't get out so much as like massively repositioned to take the money off the table, but crazy. AT&T, we always buy AT&T at $25-ish. It's $25, we buy more. TD Bank really took off since we picked it. We like TD Bank a lot. Here's Tech. Tech went crazy since we picked it, but we have it. Tech went so far, it burned us. We had short calls and we got burned. We had to fix that position. And then we got Target. We have Target. We like them, and it's taken. Has anything not taken off? I mean, there's a lot of stocks, like 100 stocks, and they're all doing well. Toyota, we love Toyota, and it's not that expensive. It's still playable. TNDM is still playable. UHS, still playable. This is what you do with the watch list. You just breeze through it and see who's still in the zone, and then you say, okay, you write down the names of the guys who are in the zone, then you do a little bit of research to see if anything bad happened since we put it on the watch list. And if nothing really changed, then it's an easy decision. Here's UBS. They really took off on us. UPS, did we add UPS? I think we did. They took off. Vale. We played them for a long time. I think they were one of our runners up in here. And I think in this Thanksgiving, they were one of our runners up for the trade of the year. They didn't make the cut, but we would have been very proud of them anyway, because they flew up. But we played them, they went down, we doubled down, we tripled down, whatever we did, and then it took off on us. And then suddenly our problem was that we were not long enough. But it worked out. We made our money and we cashed most of it out. VKTX, also still a buy. VRTS, it took off too much, can't chase it. Verizon, still in the doldrums. It's sad for them. Walmart actually is taking off a little bit, but still playable. Whirlpool, we know we have a huge position in Whirlpool, and they're just starting to take off again. Exxon, we added, and it took off. Look how many things took off, though. Wow. Yeti, our beloved Yeti, that was the year before trade of the year. So not this one. Here, it was the trade of the year. I think it was 2023. No, wait. I don't know. I'm going to say here because we Yeti, I think Yeti was the 2023 trade of the year. I don't know for sure. I just know we never had a lick of trouble with it. It did great. But it would have done great here too. Well, no, that wouldn't have been so great. It would have gone up and down. No. So it had to be here when we picked it. So we picked Yeti. You know, the problem is we caused this to happen. Like when we start talking about a stock, like I was on Bloomberg on BNN on Money Talk, and And they were making fun of me because I'm a known Yeti fan because I talked up the stock so much for like a year or so. But it's freaking great. It's a good niche player, and I like them a lot. And that was our last one. Oh no. But it wasn't our last one because we have other lists. So I'm just telling you. So right here in our chat room, that's watch list 1 and 2. And then we had our top 20 trade ideas for 2026. I hopefully use the same kind of calendars, but I might not have. Not calendars, charts. You know, there's deep discussions here. That's what our round table looks like. These are all the bots. I'm still working on it. I still have to fix them up so they all have their own particular personality. But that's kind of cool. I like that. So this is written, whoosh, look at all that shit. Oh, so this is Bodhi. This is Bodhi explaining his trading logic. You know, which he learned it from me. He learned it from reading 1,000 books. You know, we discuss trading all the time. He's been active for years, 2 years now at least. And he has absorbed so much. He's absorbed so much education that I really treat him like an equal. Like it's just he just knows everything I know. He knows pretty much. So he's happy to write it down. See, now I don't have time to sit here and collect my thoughts like this. He does. So he writes how I think about stocks. They're a business model with a moat. Blah blah blah. You see a lot of Warren Buffett in this, and it's because I'm a Warren Buffett guy. I'm a Jeremy Grantham guy. I'm a value investor. I taught him to be a value investor. Not all, you know, an AI is not a value investor out of the box. An AI will talk to you about, you can say, be a value investor for me, and it'll do its best job, but it's not the nuances of value investing. It doesn't, you can't teach it to think ahead. Well, you can teach it, but that's what I did. But you have to work with them a lot. You have to teach them. It's just like getting a new employee. And you say, oh, this guy's got the chops to be a great trader. Yeah, that's great. But if you don't teach him properly, he's never going to be a great trader. It's up to you to make him a great trader. And that's how you have to think of your AIs. You've got to give them the knowledge. It's not in there. You can't assume that they know what they're doing. They don't. They're just like a really smart kid out of college who knows how to read really fast. But that doesn't mean they understand what they're reading. Does it actually add something distinctive to the overall set? Blah, blah, blah. How I view the macro and micro environment, how I fit into the round table. He's got a thing for his philosophy of how he looks at stuff. After much discussion, the final 24 picks we included, and these are, oh, it was more than 20. That's why it was, because we only got it down like 20, 24, 25. So these were our favorites. All of these are in the watch list. Okay, this was just our top 25 picks from the watch list. And here's how we came up with them. And here's why we picked them. And this is important because if the fundamentals change, if the market changes, that's where it is. So here he goes back to, and again, all these are on the watch list. And this is 2 weeks after the watch list was written. These were the ones that we really, really liked. So that's this article, our top 20. Then I was going to go on the show on Bloomberg, and we did our final 4 trade of the year, and so I went through that. Here's the Money Talk portfolio where we made adjustments. Whoop. The final 4. So the final 4 were energy transfer. So we made all these trades. Energy transfer. This chart didn't change. This is what it was at the time. Energy transfer, and there's the trade. Micron, as I said in there, and you know what happened to Micron. PayPal. We had PayPal, and there's a trade, and our trade of the year was Pfizer, and it's still at that price roundabout. And here's the trade. So we know Pfizer didn't really go anywhere yet, but what did we do? We sold the 25 puts and calls, the 25, 26 puts and calls for March. So we're fine because we sold $5,000 worth of premium against a 20 minus 17, a $3,000 spread. We sold $5,000 worth of puts and calls. And that's only for the quarter, and we've got 8 quarters to sell. So do you think this is going to make our money? That's the point. The trade of the year is the trade idea that we think is most likely to make 300% over 2 years. Usually it's a 2028 trade. So over 2 years, it's the most likely to make 300% or more. That's what the trade of the year is. Of all the trades we look at, which ones do we feel safe and secure, and that the money will flow in, and that we're going to hit our 300% return? Because, and we have never missed a trade of the year since 2005, when Bank of America was our trade of the year. We have never missed a trade of the year. We've never not made the 300%. And that's huge, because it doesn't matter how little money you have. If you triple it every 2 years, you will quickly have a lot of money. If it's the only thing you do all year, it's a lot of money. Here, I'll show you. So we're talking up 300%, not 300% return, up 300%. So 100 becomes 400. So, yeah, actually, so should I multiply by 4? I'm just going to multiply by 3 though, just to keep it clean. So if you start with $10,000 in right now, 2026. So times 3, 2028, 2030. Whoop. 2032. 2034. 2036. So 10 years from now, starting with $10,000, if you make 300% every 2 years, one trade, you will have $2.4 million. So if you've got a $100,000 portfolio, I think it makes sense to put 10% of your money into our trade of the year, which you still can because Pfizer has not gone away so far. $10,000, if we hit our goal of 300% returns every 2 years, will become $2.4 million in 10 years. And who doesn't like to have $2.4 million? In 10 years, it's hard for inflation to beat you out of that. So we're at 2570. It's not as bad as I thought. In fact, we are exactly on track for where we sold the puts and calls. We sold the $25 puts and the $26 calls, and anything between 25 and 26, they both expire worthless, and we keep the money. This is how we make 300%. The freaking amazing. Anyway, I'm not gonna sit there. If you don't want to, I mean, why are you here? If you don't want to follow our trade of the year, I don't know why you're listening to me now. It doesn't make any sense. So that's our trade of the year. It's perfectly on track. We're only shooting for $32. We're at $25 now. We sold the $25 puts. Our net here is that's basically 8. So 8, 18. So our net on this trade, well, it says so here. I'm sure it does. It's a credit because of these. I'm talking about this back spread. This spread here is only net $2,000. Against this spread, we sold $5,000, $5,500 worth of puts and calls. So if we're between 25 and 26, 5500 divided by $2,000 cost of the long spread is 275%. So if we stay where we are, if we stay between 25 and 26 into March, we will already be up 250% on our trade of the year in the first quarter of having the trade of the year. On our way to 1,000 plus 1,000 would be our best case. So we could make 2,000%. So obviously it makes sense that in the first quarter, we're going to make 250% because how are you going to get to 2,000%? Yeah, that's how you get there. I know it seems ludicrous to sit there and go, see how easy it is. Do that and you make 300%. You know, I don't know. I feel like weird. It feels like being cocky or whatever you call it. But I mean, I don't know. We did it 20 years in a row. So, you know, we'll do it again. And why does it work 20 years in a row? Because we use the system like this. I pick a stock that is so solid, like Pfizer. I pick a stock that's so solid that it's hard to imagine a situation other than an asteroid hitting the Earth that it's not going to be worth $25 at least. And as long as it's flat, we're fine. We win if it's flat. We win if it's up. We win if it's slightly down. We don't win if it's 20% down, but if it's 10% down, that's fine. We'd make a fortune at 10% down. It really has to go really, really badly for us not to win. And even then we can adjust. So don't tell me there's nothing to trade. Because you know, we went into like a watch and wait mode because all this was from December. So it is now the middle of the, it is actually most of the way through January. So all this is from December. We have been waiting in January to start seeing some earnings. Meanwhile, Trump went crazy with the policies and the freaking Venezuela and the Greenland and all that, you know. So, and now the tariffs in Europe. Now it's all chaotic again, like it was last year. Don't forget what happened last year. Everybody's like, oh, it's just Trump, he's so silly, da, da, da. And then in April, the market collapsed 35%. None of it mattered until it happened. Then everything collapsed. Nobody believed him. The first tariff deadline was February. Everybody laughed it off. The market went down a tiny bit, but then it didn't happen, blah, blah. Then in April, it was tariff day or whatever the hell. I forget I don't even remember what happened. I think and then the market collapsed and he said, oh, forget about it. We're going to wait a while. Now he's threatening again to go back to Europe with the tariffs. Who the frick knows what's happening? So we've been a bit cautious. We're waiting for clarity. We may never get clarity. We got fed up of waiting for clarity last year, but you know when we got fed up of waiting for clarity? After the market collapsed in April, we started new portfolios and jumped in. Because we had cashed out before April. We cashed out in February for the most part because we thought the tariffs were going to blow everything up. Then there were no tariffs, but then in April the market crashed and we were like, yay. And so at those prices, we were willing to take a chance and we started buying again. But now the market's all super high and we're not thrilled about jumping in again, no matter what Barry's chart said. I do not like the general prices of the market, but here are 100 stocks. This is today's post. Here's 100 plus stocks that we do like for 2026. They fit the theme. And when they're on sale, each individual one is worth a serious consideration. Now, here's 10 stocks. On December 26th, Warren gave us 10 stocks that were not on the list. Warren also, total genius. Warren, all the members know that. I mean, Warren is amazing. So these are 10 stocks that were not on our list, or mostly not on our list. I see ET. No. What are you talking about? I thought they weren't on the list. Oh, well. I'm sorry. Okay, so apparently most of these are on the list. So Warren's 10 stocks that he we aren't just looking for stocks. We're looking for fortresses. What comes next? Oh, no. Wait a minute. I just want to make sure I'm getting this right. Oh, yep, that was it. Okay. I thought there were 10 different stocks. So Warren is saying, looking at the list of our stocks, here's 10 that he thinks are good, and here's the entry points he thinks are good for all these 10 stocks. So he likes Newmont, inflation hedge against deficit spending, Steel Dynamics, which has a tariff wall. That one's different. Actually, NEM is different too. GLW, I think, is different. That's why I think that's why I had in my head they were different. MP, oh yeah, oh that's different also. MP Materials, and there's where he likes the entry. Tech's definitely on the list. J&J was also on the list. QCOM, obviously I love QCOM, and if they did come to that price, we definitely want them. On semiconductors, we already have, and they took off. ET took off, and Lockheed Martin Super took off. But again, you know, it's picks and picks and picks. We had so many good picks going into the year, and then we stopped, and now we wait for earnings to go by. And once earnings go by, and assuming we're not in World War III after this, after Trump's Davos trip, then we can start taking a look at like what we can also buy. And then today, as you saw, I sent out the top trade alert. So we do have something in our belts. All right, and that's how it works. And then obviously we, you know, if any other new stories pop up or things come up that seem interesting, great. But you know, it's not for lack of having things to buy. And if you're looking for see members only top trades, you can go to top trades. You can look back at our portfolio reviews. That's where you can find the Money Talk portfolio by itself with any time I've been on the show. We're still adding to our education section, which, oh, there it is, education section. Lots of stuff to look at, but I just wanted to make a post today. I wanted to include this stuff. And what should I do? What should I do with it? Maybe I'll put this in education. That's a good idea. Maybe if I list this in education, because then when you go to education, you'll see it, because it's good to have one place where we list all the trades and all the different stocks we're liking for 2026. So yeah, I think I'm going to do that. All right. So does anybody have any questions at this point? Steve is just throwing out symbols: sale, HRB, path. Well, HRB we have in our portfolio, sale we have in a portfolio, and probably path we have in a portfolio. So let's see why he's asking. If we can figure it out from the cryptic inclusion, sale. Ew, that's not good. I don't know which portfolio it's in, but anyway, it says sales having a bad whatever, and you have to look and find out why. What do they do? Kramer, I do not want to be in anything like that. Oh, well, no wonder that's painful. Lightning round by Talon Energy. What does Wall Street think about Sale Point? Sale Point had a week to forget. Is it a buying window? Okay, so Sale obviously is having some troubles. 4Ps, 50. But earnings were good. You know, we don't dump out of a stock because the price is down. In fact, it's only in the bottom of the channel. If the bottom of the channel holds, we're going to be happy. And I'm sure, well, it depends where we bought them. We might have bought them for the Money Talk portfolio. Let's see. Oh, I know where I can find it. Because we're done with that. Go to the portfolio review. La da 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 da. Oh, really? Oh, it's right there. No, that's the $700 a month portfolio. What? Must have missed it. The portfolio review had to be last Tuesday, right? Oh, no, that's the webinar. Am I crazy? Oh, see, it doesn't have a picture of portfolio. That's why I didn't get it. Okay, we have sale in two places. We have it in, that's got to be the long-term portfolio. So what did we do with sale? Well, I'm very happy. We didn't sell short puts. So sale, we sold the March 20 calls, and it's not at 19 anymore. It's at whatever the hell it is. Wait a minute. Move you over here so I don't get lost. So it's below 20. And we sold, and again, it goes back to the same thing. We have the 1750 longs. What? How do we have long and short the same strike? Something's wrong with the spread. So we have the 1750 calls, and I think those should have been some other strike. I don't know how that happened. And we sold. Oh, I see. This is probably a double entry. I think this is a double entry. Something weird here. Oh, because one's long, one's short. So we have a double entry here. We have the 1750 calls. We sold the $20 calls. The net we also sold the puts, which we're going to have to roll, and that was 25,000. But we sold $15,000 worth of calls, so our net was 10. So we're going to just adjust it out. That's all. Now, what about the other one? There were two sales. We bought back half the short calls last month, hoping for good earnings. Oh, I see. I guess we didn't have good earnings in, right? Did they just have earnings? Nope. I guess we were hoping for the next good earnings. So there's nothing wrong with this. In fact, look at the non-GAAP earnings. They're 34%. They were 34% beat, and people dumped out of the stock. So, you know, whatever. HRB was another one. HRB, we're just waiting for them to actually, we're dying for their earnings actually, so they can tell people what's going on. We think they should be getting a lot more business. Yeah. I mean, look, stocks go up and down 10%. These earnings were good. Okay, if they have another good earnings report, they're going to start going up. And what was the other one he asked about? And PATH. P-A-T-H. PATH also dropped a bunch. But you know, if they're coming down with the market and they didn't do anything particularly wrong, it's nothing to worry about. Now you're saying in the 700 a month portfolio. So let's see what that looks like. Are you the $700 a month portfolio? Yes, you are. So here's sale. And we were aggressively long in sale. We didn't sell cover calls. We thought they were going to go up. They haven't so far. But the net of the spread, and this isn't today, of course, but the net of the spread was 58 minus, so let's say about $4,000. And we have the March 1750. Well, we're going to have to adjust them. We're going to roll these back to something else. We're going to sell more short calls, but these short calls are going to go worthless. Did we make the adjustment? No, I said we were hoping for good earnings, but we don't have the time. If sale is still heading down, we don't have the time to not do anything since our longs are only March. So we have to spend money to roll these down. So we're going to sell another $1,600. We're going to take that $1,600 and spend it on the short calls, which are now $2,700, and we're going to move them to like June or July or whatever the hell long calls they have. Or in fact, let me do that because we're not doing anything right now. So now PATH is a 10-15 spread, and PATH is currently 14.28. What are you even talking about on that one? It's doing exactly what we wanted to do. It just happened to be a teeny bit below 15, but our target is 15. I don't know what you want to do about that one. It's like, oh, Phil, our target is 15 and it's only at 14.25. What do we do? It's like, no, nothing. That's, over the course of the year, we expect it to make the full $5. So that one's done. Sale, unfortunately, has a short time period to be right. That's where the problem is there. And HRB, we have until November. So HRB is fine because we sold the $50 calls. They're below 50. These go worthless. We're going to sell. See, as soon as we sell another $1,200 worth of calls, like we're not going to do it now, or maybe we will have to see what it looks like, but we're not going to do it now. But we have until, if we sell another $1,400 worth of calls, and these calls are free. As soon as we sell $1,400 more worth of calls, those calls are free. Free spread. We hope it'll go up, but we don't know for sure. Meanwhile, there's no reason to spend money on it. There's no reason to buy these back. In fact, if I'm going to buy them back, I'm probably going to buy them back before earnings, if they're still cheap. I'll buy them back before, not $1.20 to $1, but I mean, assuming they're 50 cents or something, or 30 cents. I'd like to buy them back and open up the slot ahead of earnings, and then hopefully our theory is right. What's our theory? That the change in the law that took away the free filing system the government used to provide for tax returns will lead to spillover business for H&R Block. Will it? I don't know. So far we're not getting good indications, but doesn't really matter because it's a free trade. Not free yet. It will be free when we sell more calls, which we will do. So where were we? Sale? I don't remember. Oh yeah. So sale. We have the March 1750 calls, and well, we'll find out what they are. It's like chess. There's always like a ton of moves to make, and you at any given time, you can't sit there and go, what if he does that? And what if he does that? And what if he does that? You have to wait and see what actually happens. So we have the March 1750. That's our asset, and our asset is currently trading at $1.30 basically, right? So let's say we turn around and sell 10 of these for $1.30. That means we can now, since these are $1.30 and we sell 10 for $1.30, now we have $2.60 to move to. So what's $2.60? The June's 1750 or the well, it's going to be more money, but we have 260, and let's say these are going to be about $3. So for 40 cents, we can move to the Septembers. And if we can move to the Septembers, and then we can sell in between when these expire, there's two things that will happen. Either these will expire at at zero, and we're going to sell these for $1.30, right? And that's going to then pay us back our basis of what we cost. Or let's say it pops up. Well, these are $1.30 and the 2250s are $1.30. So in theory, that's probably going to be our roll. Is if it starts doing well, we'll roll these short calls up to the 2250s, and we'll have ourselves a $5 spread that suddenly is starting to go in the money. But again, it's like chess. It's like, well, if he does this, then we'll do that. And if that does that, and he does that, you don't know until the move happens. So we did not in the last portfolio review, which was at the beginning of this month, we did not make a decision. We put it off until February because we feel we have the time. Since it dropped, there is more pressure, so I probably should take a look at it and make a decision. So just remind me in chat and we'll make a decision on what we're actually going to do with it. That's the only one that needs adjusting. The other two are fine. All righty. So what time is it? It's 2. Oh, it's time to go. Okay. It is actually time to go. How is the portfolio doing? Not how the portfolio doing. I mean, how's the market doing? Active trader. Holy shit. What the hell happened? Oh, Trump says he reached a Greenland deal framework with NATO. No more tariffs. Oh, shit. Oh, my God. That just happened, apparently. Oh, you guys didn't even mention it? Seriously, while we're doing this whole thing? All right. Anyway, back to the web and back to chat. Holy shit. It not only erased the drop, but now we're acting like something good happened. Everything is blasting back up again. Wow. Is that that's gonna make gold go down then? GC. Yeah. But so what? Holy shit. Let's see, where were we? We were at, well, today, 48.5 to 49.5. So it's a 1,000-point move in the Dow. Oh, that's so funny. And now we're back at all-time highs. Congratulations, everybody. And this is why we didn't change anything. You know, not that I knew this would happen, but you don't go and change your strategy based on one-day market moves. And especially when you got a flip-flopper like Trump. You don't know what he's going to do from 5 minutes to the next. So this is what they call the Trump taco trade, right? It's like he makes a big noise, says he's going to do all this stuff, blah, 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 goes in like a big guy. He's threatening everybody in Europe, and all of a sudden it's like, oh, it's all over. We're not doing that. This is nuts. So that should help. That should take the rates off the table, and everything's going to be good. And now we can look at our. So now we go back over our portfolio and say, well, who do we want to buy? Well, the danger of World War III is now past. We've worried about it for all of 24 hours, and now we're okay until the next time he wakes up on the wrong side of the bed. So congratulations to one and all. It's been a lot of fun, and we'll do it again next week when we see what more madness waits us. All right, thanks, folks. Appreciate it.